Thursday, September 11th, market analysis, Stan Ehrlich, 1:42 California time, and another very firm, pretty strong day up in the stock market. That doesn't change the situation. We now have an overbought condition in one of the indexes. The others are close behind, implying that soon we're going to have a turn back down from slightly higher, probably, considering we've made new historical highs in many cases, and it has maintained those levels for a couple of days, has done the right thing by turning back to support and popping back up again, etc. So modestly friendly on indexes, very cautiously friendly, because I do believe we're going to have a significant high soon because of the October lows, obviously next month, being approximately 90+% reliable historically. That's when we have had 90+% of the October lows since 1993 occur. Some not quite as profound as others, but still a buying opportunity of some significance. So here we go. Getting overbought, very close to it, E-mini, or the QQQ. I should start where I want to usually. There we go. The E-mini, micro, whatever, new high close. Started to close at or a little bit above the resistance line yesterday, and a significant upside, substantial follow through today. Now we're super close to getting overbought, but not quite. That implies another pop-up day, something like today, maybe even bigger. But we're looking at the beginning of something we might see as exhaustion strength, or a spike top. There's a variety of names starting, because I do expect a bit more, and it could get substantial. Next is the 5-minute chart, and of course, looking very good. Pullbacks to the right spot, support areas, higher lows, higher highs, but getting stronger faster is indicative of getting close to a turn. Next, Spider overbought today, SPY. So the last time that happened was late July, ended up turning into a couple of days or so, pretty sharp break. I am expecting at a minimum something like that, hopefully with the bearish engulfing ER sell signals in red at the time. Again, so I got all the conditions are right. I just have to have that bearish engulfing, and or a variety of other things. Next, strong market, looking good. I wished I didn't have to be saying this, because a few weeks ago I was expecting it to turn down at that time. Go with the flow. Next, QQQ, same story, and this time we are clearly and including the close above the previous historic highs made not too long ago in a single overbought day on August 13th. So it's been almost a month. So if we fail here, all of a sudden, double top. That doesn't look likely at the moment. Next, QQQ. That's the 5-minute chart. Looking pretty good. Next, NASDAQ futures. We have challenging a previous historical high level yesterday, and today's high is about the same today, but the close today is much stronger, right near the high of the day, and I'm not going to be surprised if it doesn't pop through it or maybe even gap above it tomorrow morning. Bullish, cautiously, I wouldn't use that word, friendly, cautiously, very cautiously, with the stock indexes at the moment. And again, I expect much more to the downside than the little bit of move we have left, I think, on the upside. What I go to, yeah. So now we have YM, different story, but it is critically important to note that today's high on the YM is almost exactly at the previous high that was way back in November of last year. So this is a broad double top possibility. Possible. This is how they occur. People don't think about it. The day they're in this situation, closing right near the high, that's how a lot of indexes get into position to go short, is when markets close right near their highs, stochastics and a variety of others. So that's something to be very much aware of. Next, and you've got your YM stalling out right as it approaches that previous historical high. Next, Russell, still in a very broad resistance area, still stair-stepping itself up. Big, strong day up, new high close, looking friendly. But this, again, is a hugely important long-term resistance area going back to 2021. And it's topped out in this broad area before, big time. Large head and shoulder top complex. Next, and that is the 5-minute chart. Now, bonds, overbought again. New highs for the move up. Sort of in a little cloud here, but I think it's going to roll over very soon. Normally, you don't see the market stay 1, 2, 3, 4 days into overbought territory. My custom overbought RSI from Wells Wilder. I learned it from RSI from him himself. And sometimes there's a tiny touch, and you do have the capability of being in a week or more, but it finally does cause a significant retracement. So we're 4 days into this, and minor new highs. Anytime now, this could start to flip-flop back down again, maybe with a big sell signal. That would be a red bearish engulfing arrow sell signal, like we had April 7th. And a little bit of a move down, not much, as a result of March 11th. And another decent little move in a few days. They don't have to necessarily be the bottom of the market for months to come, January 14th. Next. Soybeans, I'm sorry, this is notes. Did have a bearish engulfing. Now, I'd love to tell you that every time they happen, it's like that one. Or, whoa, that one. But they don't. But they are frequently also part of topping out or bottoming out for green activity. And a little bit higher high today is exactly what happened 2 days after my ER sell signal. And it did blow away that sell signal. I think actually yesterday it did it. But we got overbought again. And the high today is getting closer and closer to the highs that we saw way back on April 8th. Another resistance area, which I got marked apparently by this resistance zone here. Yep, that's what it looks like. So maybe we're going to see one more shot up, and a big one, to get more overbought, and then top out. So we're close. Next, crude. Support, no reversal per se. Rock in a hard spot. It could very well bounce off this thing again. I wouldn't feel good going short here, that's for sure. And I would be looking for buy signals. Next, natural gas. Coming down nicely. Nice. I've been talking about this complex head and shoulder top for months. Before it broke out, before the last shoulders happened. There's a downside objective on this of 1.3. This looks to me like the last day or two is the beginning of the next push to new low ground completely, below 2.7. And I wouldn't be surprised if the angle of descent got steeper. That's the way bear markets bottom out, with a lot of fanfare, a lot of flashy bearish activity. And then all of a sudden, things change. So, next, heating oil. Rock in a hard spot. Trading range, you can see slightly sloping channels, or pennants and wedges and all that are going sideways, which they are mostly. And it's between a trend line and a trend line, which could be sideways in both cases. Sideways channel. That's something like we've got here. Maybe it slants upwards a little bit. And, next, gold, overbought, topped out 2 days ago. Today we're just a little bit lower on the close and tested yesterday's lows, but couldn't break them. Overbought condition, again, still hasn't changed. I think we could start breaking down here and come all the way back without much of a problem to 3.3536. Next, silver. Also blocky toppy type of activity. So any close or even a move below 41 period, and if it stayed there for a few minutes or more and started dropping into new lows again, should start the beginning of a move down probably to 39.40. But I wouldn't doubt that it would drop a chunk more. Next, platinum. Rock in a hard spot again. Bear trend line across the top, bull trend line across the bottom for the last, 2 months or so. Pennant formation, sort of. Seen better, but I could draw the lines without, violating the rules. Sideways, let's wait. High-grade copper. Wow, I'm impressed. New high close since the crash. Implies all of this activity is a modest base building type of trading range, not very big. And actually not too much different than what we had, prior to this huge rally and then the crash. Okay, a little bit less. Nevertheless, this is friendly. Now I can start to talk about up to 5. Probably not much. Better. Next, still a long-term bear market, probably. Soybeans did rally nicely, and I'm going to point out that they had a bullish engulfing candlestick. This is not an ER buy signal because we weren't oversold, unfortunately. Otherwise, it would be green, like that one, which produced a whopping rally for 3 days, and there was follow-through. But I do like the fact that it came down again, basically the third time to test the lows of 6 days ago, and it couldn't break them, and then closed above yesterday's high, and right at the highest high closings for the last several days. Anything stronger on a close looks like a minor upside breakout, but that would be good enough to probably pump it back up to these recent highs. That's important. Probably won't be overbought, because if we break through this resistance area, old high since May, then you're talking about something much longer and much more important than many months back, et cetera, et cetera. Plus the fact that the long-term lows are higher than previous, and now you're making long-term higher highs. Next, soybean oil, head and shoulder bottoms gone. A couple of days ago, I erased the neckline and the upside objective because it failed and closed well below the neckline. But looky here. If I draw that old neckline back in again, this is interesting. It probably closed at it, if not, right about at it. That's theoretically now a resistance line. So if it turns back down again, that would be just perfect. But if it closes above it, higher than today's close, is that going to go down in history as being yesterday and the previous trading day a bear trap and a false break of the neckline and one of those little anomalies for just 2 days? On a longer-term picture that we had an objective of 62.62, as I remember. I don't know yet. I don't like the fact that it stopped right at the old neckline, so I'm looking for sideways bearish. Next. A little bit of a reversal. Soybean meal. Remember, I'm trying to talk grains into a long-term bull market. They're not listening that much yet. Especially soybean oil was a little disappointing. Nice. Not great. Sideways to up. Next. Corn. Nice, but not great. I think that's a bullish engulfing. Wouldn't call it huge by any means, but that's still good enough. Friendly. Next. Wheat market. Now, I don't know. What was yesterday's high? 2.25. Today's high is exactly the same. You betcha. So, not an outside up day. but super close. And I don't, I can't really legitimately tell you super close makes the grade. It's not supposed to. This is black and white. This is yes or no. This is on or off. This is 1 or 2. So no, but I do like the fact that it's at a new low ground for a trend and then did that. I think it's going to move up a little. Shell, sideways, recently oversold. I'm looking for probably a little bit more sideways to a little bit higher, but we're between a rock and a hard spot. We got oversold, and that was it. Tested support, turned up for a couple of days. Next, Apple. Now, interestingly enough, after gapping up, it gapped down over some of the previous up gap price range. So you have what you would call, but it's not really, a 5-day island top. Not really. There's no such thing. Usually there's 1 day, up and down. That's about it. Rarely 2, but not 5. And we're probably going to come back up to close the little gap now, the smaller one at 233. And then I'm thinking, let's decide at that time. Next, Tesla. Overbought at resistance. Good combination for a top. That's exactly what I've got to say. I think it's about to literally, maybe even open steady to lower and go straight back down tomorrow. There's a gap to close also. Next, NVIDIA. Gap to close lower levels. After a bullish engulfing ER buy signal, it gapped up like crazy yesterday. Excuse me. And a little bit more earlier, closed about unchanged, down a hair. We got to close this gap still. Well, we don't got to. It is likely that we close this gap soon. So I look over for a little bit of a dip back to 72-ish. 172, yeah, probably. And we've got the E-mini again. Have a great day and profitable trading to you.